What's going on, everybody? Pete Peterson here with Dream Huge Realty, and today we're going to be discussing rental properties. More specifically, how much money should you make on a rental property per month, per year? I read an article this week and I started to dive in, and it goes on to break down four different formulas: the 1% rule, capitalization rate, return on your investment, cash on cash return. I began to read through, and I thought this would be a good article to summarize and do a video on. But as I began to read, I actually found errors in the article. And then I went in to read the comments of the article, and the other commenters were finding the same errors. So be careful what you find online. And the bottom line was these ratios, all these formulas, they can really bury you. You really have to strip it down to the basics. And what I like to look for is number one and foremost is cash flow. Itemize everything out. And I'm going to show you that here on a spreadsheet here in just a second. We're going to do a sample property. Itemize everything out on a spreadsheet so you can come up with the actual cash flow, what you have left over in your pocket after everything is paid and after all the rents are collected. The other thing you want to look at, very close second, and maybe even just as important, is the return on your investment. Because folks, if you invested money in the stock market, in the S&P 500 index fund, you're going to get 13.6% return annually on your money. So I think if you are jumping into the real estate investment world, if you're jumping into being a landlord, you have to know it's a job. It can be a part-time job. It can actually be a full-time job. You're not just going to sit back and collect rent. You're going to have leaky pipes. You're going to have leaky toilets. You're going to have evictions. You're going to have everything that has to do with the business to deal with. So keep that in mind. It takes work. It takes hard work. So what is hard work? What is your time worth? Your time is valuable. Time is money. So if you can invest in the stock market, in the S&P 500 index fund, and without lifting a finger, basically, and make 13.6% on average, I would say the answer to how much should you make in the real estate market when investing in rental properties is something higher than that number. So let's aim for 15% return on investment, and also watch closely as we figure out how much this $50,000 rental property actually cash flows here in Mansfield, Ohio, looking at real numbers. So here we go. Let's check it out. We're buying a rental property in Mansfield, Ohio, a fictional rental property. $50,000 is the purchase price. We put 30% down, so we're in for $15,000. We have a mortgage amount of $35,000. Closing costs happen to be zero. The fine sellers have taken care of our closing costs for us, so that is good. The loan terms, let's figure on 20 years at 4%. Interest rate's going to be slightly higher with commercial, and you can figure on 20 to 25 years of a slightly shorter term as well. So now let's look at total income. So I am looking at renting this house for $800 per month. So you see I've got per month, I've got per year. So at $800 a month, we're bringing in $9,600 a year. Our taxes, $388 per year. Folks, be careful on this one right here, because if the property is undervalued on your auditor's website, keep an eye on your taxes. This property, for example, was valued at $25,000 when in actuality we bought it for $50,000. So you can foresee your taxes doubling at some point. Properties here in Richland County are reassessed for tax values every 6 years at the minimum. So just keep that in mind. But currently taxes are $388 per year, insurance $700 a year, trash $300, water sewer $300, gas and electric $0. Okay, so this particular property, the landlord, the owner, pays for the trash and the water and the sewer, and the tenants pay for the gas and electric. Lawn care $0, snow removal $0. Great and fortunate to have some awesome tenants that help us out with the lawn care and the snow removal on this particular property. Maintenance slash repairs can go one in together, but let's figure on maintenance slash repairs being 10% estimated. Supplies, fees, it just varies, so keep an eye on those. Vacancies, 5%, again, estimated, 5%. Capital expenditures, $960 a year. Capital expenditure is different than a maintenance item. A maintenance item is a refrigerator or a water leak, a leaky pipe, or things of that nature. Capital expenditures are large things that need improved, capital improvements such as a new roof, a new driveway. The house needs siding, it needs windows. So this may not be every year, but over time, you may go 3 or 4 years without any capital expenditures, any major ones, but over time you will have to account for that. So I figure at 10% on capital expenditures. Management fees, you can figure on 10% roughly. We're managing this ourselves, so let's figure on 0 there. Total expenses, $4,088. So that brings your net operating income, which is your total income minus your total expenses is your net operating income, or NOI. That brings us to $5512 or $459 per month. Not bad for one unit. Mortgage payment. You can just Google mortgage calculator and you can punch in these things, punch in your terms, and you will come up with your payment. $212 a month, $2544 per year. So that brings so you have to minus that out of your net operating income. So that brings your cash flow to $2968 on the year. An additional $250 basically in your pocket every month from a $15,000 investment. So this again, net operating income divided by price equals your cap rate. Now we'll talk about cap rate a little bit. I don't want to get too hung up on that. It's 11% cap. So that's your net operating income divided by your purchase price. Cap rate varies. It varies by neighborhood. It's a good thing to use to, again, a bird's eye view when evaluating properties in maybe a similar neighborhood or similar location. You can keep an eye on that. But it doesn't truly tell you your cash flow because it doesn't take into account your mortgage. So that you take with a grain of salt. You use it as an indicator. Do I want to dive in further? You'll see 10 to 12 cap rates in Mansfield, 14 to 8%, probably say 8 to 14%. Now you go into a larger city, the cap rate's going to drop significantly. 2 to 3% cap rate is not uncommon to see in the big cities where the prices are higher. So keep that in mind. And the question is always, well, what is a good cap rate? Well, I'd say that 8 to 12 range, but what really matters again is what is the cash flow. So let's look here. So your cash flow, again, we're making $3,000 a year. Cash flow. See that? So your cash flow, what you made, divided by what you paid, your investment, $15,000 equals your return on your investment. So you look at that, we're at almost 20% there. So awesome job. Hey, I know I can get about 14% in the stock market, not lifting a finger, but with this particular house, these are real numbers. It's an example of an existing home sale here in Mansfield, Richland County, Ohio. $50,000 house, renting for $800 a month. With these expenses here, you're going to see a cash flow of $3,000 per year, which is a return on your investment of 20%. So like I said, great job there. You beat the stock market, and you've acquired that good debt to turn that into equity in your portfolio. All right, everybody. Hopefully we have a better understanding now of breaking down rental properties, investment properties, and don't get lost in the weeds. Don't overanalyze with ratios and formulas and percentages, folks. Keep it simple and focus on that cash flow. And then also keep a very close eye on your return on your investment. We want something at least in the double digits, and I prefer 15% so we could surpass what we could make in the stock market every day. So keep that in mind. Hey guys, if you have any questions, reach out to us, 419-528-8260, or visit us online at dreamhuge.com/thedreamteam. Any one of us here at the Dream Team would love to help you out with any of your real estate needs. So remember the rules. Work hard, never give up, and dream huge. Have a great day, everybody. We'll see you.